Motorists are likely to have to dig deeper into their pockets come March, that's next month, as the price of fuel is expected to increase once again. Petrol is set to rise by at least 123 cents a litre, while diesel and paraffin are expected to soar by over 130 cents per litre. This, among other factors, is a result of attacks on fuel storage facilities in the United Arab Emirates and concerns over the conflict between Russia and Ukraine. Now, South Africa may not import oil from either country directly, but global oil prices are highly dependent on Russia's actions. Russia supplies much of the oil and gas to the rest of the world, and the tension there could result in a cut-off, which could in turn see global prices soar. Well, that's the impact. Market analyst, economist, and director of Inkunzi Wealth Group, Owen Nkomo, joining me now to discuss this, along with the impact it may have on our country. Owen, good afternoon. Thank you very much. I just had a discussion the last half hour or so with three diplomats, the Ukrainian ambassador to South Africa, the press attaché of the Russian Russian embassy, and the acting consul general of the US to South Africa. And all of them are saying, yes, there is a risk of this escalating, but Russia says we don't want the conflict and we all want a diplomatic solution. But meanwhile, the world is watching and closely, and our Minister of Energy and Mineral Resources, Gwede Mantashe, is saying you should be watching and concerned about what's happening between Russia and Ukraine just because of that oil price. How significant is this?
It is quite significant, Brad Dan. As you can see, the recent numbers being done there by the oil pricing team in the country is indicating an almost 6.6% increase in the price of fuel. So any further escalations will result in more price increases for fuel going forward. We could get a position where the price of oil per barrel continues to increase because of all these wars. And this impasse between Russia and Ukraine, and the unlimited, or rather the lack of increase in productivity coming out of OPEC. I believe that we might potentially see ourselves paying 25 rands per litre for fuel before the year is out, and also depending on how long this is going to be protracted. So that is what we're going to have to pay for in South Africa. We won't be involved in the war, but indirectly we're going to have to pay for a higher price rather for oil going forward.
Yeah, and currency-wise, because we buy this in dollars, what's happening there currently? Are there any indirect impact on currencies, particularly the dollar?
Look, the dollar obviously should there be a full-blown war that ensues, should America get involved in this Russia-Ukraine debate in a physical way, I do believe that the dollar might probably weaken and the emerging market currencies might probably find favor. And I think this is why the rand has actually been relatively okay over the past few weeks. I saw it trading just about 15, 10, 12 earlier. But I think, like everything else, should there be a first strike and an indication that things are escalating to a position of war, all currencies might react with a knee-jerk reaction and fall. But I do believe that the countries actually involved are going to take the biggest brunt of this issue. For us, we hope that the rand doesn't fall aggressively, because if it does, it's a very negative play on the price of fuel that we'll pay, because we obviously import oil, as you say, and a whole lot of other things as well that we don't manufacture in the country. A weaker currency means that we're importing more inflation. And as you can see in our trend, luckily the recent inflation numbers were lower than expected. We are not through 6% yet, but I do believe that any aggravation on the Russian and Ukrainian front might result in that scenario changing, actually.
Yeah, this is a good example of how geopolitical risks can really affect you, whether you are directly or indirectly involved, whether you're close or far away, like you are. How much of geopolitical lens in terms of risk that we could see coming through or should be considered by our Minister of Finance, Nkomo, ahead of Wednesday, when he's going to deliver the budget speech? After all, we are part of the global village.
Yes, we are indeed, but I think that to Nkomo at this stage, there's nothing he can do about anything relating to this geopolitical risk at the moment. He just has to keep an eye on it, and keep an eye particularly on what it does, should it have an impact on global inflation? Should it have an impact on global growth? That's if this current impasse results in shots being fired, then it changes the scenario to a position where we think maybe the currency side of things looks different. The inflation side of things might get worse, particularly for the developed countries. America is sitting with 7.5% in inflation, and they're going to be pushed to increase interest rates, in my humble view, for 4 to 5 times probably this year. And if they do that, it means the gap between South African interest rates and American interest rates is narrowing down, which might force the dollar probably to strengthen relative to rand. But you know what, Braden? With these numbers, we can postulate until the cows come home. But we will only get the real sense when things start happening.
Yeah, but already, let's hope things don't start to happen. Nobody wants a war, but from also the diplomats were telling me that a little bit earlier. But currently, with the uncertainty since late last year, with Russia upping the ante, so to speak, by deploying more troops next to the border with the Ukraine, although they are now claiming they are scaling down, but the rest of the West does not believe them or trust them. We are seeing this uncertainty is going to affect as soon as next month the price of fuel. So should we be factoring as consumers the likelihood that short of a full-scale war between Russia and Ukraine, while the uncertainty and the standoff and the tension continues, we should brace ourselves for the next few months of an oil price hike? For example, Mr. Kodongwane is likely to increase the fuel levy, although everybody is asking him not to, people like the Automobile Association, and that will kick in on the 1st of April, where then the levy comes in, the price goes up. But with this Russia-Ukraine thing, should we be factoring that for many more months to come, in your view, Owen?
Obviously, that's going to depend on how long this fracas happening in Russia and Ukraine, with America looking to get involved and probably its allies against Russia looking to get involved, should things escalate. Then we will get worried if this thing takes a long time. But I think, in my humble view, talking about the price of fuel, the only thing that the government can control at this stage is maybe to have a different outlook and say, at least maybe for this year, because of the aggressive inflation that we're seeing, maybe the cars are not going to increase the levies. It doesn't make any sense at all. In fact, anything, we need to be reducing those levies, maybe for a certain period of time. You need to look at that rough contribution, the road accident fund, they're in trouble. But we need to start prioritizing. Does it make sense to make big provisions for people who are involved in accidents, or should we just provide them with health care facilities without necessarily doling out millions of rands to them? Because if you're in an accident and you get 5 million rands, only one person benefits, but the rest of the country is contributing to that. So I do hope that maybe Kotonwane can consider actually reducing the fuel levy, maybe to the tune of 2 rands even, because we cannot afford any further fuel price increases at this stage. And we actually recipients of price increases that are coming from outside the country. So let's control what we can through this levy mechanism, because otherwise I do think the government is being lazy by not trying to find other ways of collecting tax.
Thank you very much for your insights as usual. That's Owen Nkomo from Inkunzi Wealth Group. Still,